Hey, welcome to the Closing Beat. Happy Monday to you. How you doing? Have a good weekend out there? All's good? We had a good weekend. A little bit of celebration around here. Jazz Wealth officially ranked by the USA Today the 66th best advisor in all of America, right? All of it. Well, we're going with all of America. Well, technically, it is all of America. What, 32,500?
600.
32,600 advisors. 66 over here. How about the other guys?
We might be, well, just the top on YouTube. I think we're the best financial advisor.
I think you're probably. What about the money guys?
Then I think they're 348.
Oh, 348 for them. Oh, man. Hey, we wish you well. It was good competition out there. Anyways, we're here to talk about the markets, not to start fights on the internet. So hope you had a good weekend. The market decided it wanted to wake up and take a shot today. Nothing too crazy. A little bit of back and forth, and you kind of expect that. I'm going to dive into a handful of things there. If you look at the S&P, we've come off of our 5% decline. However, that doesn't necessarily mean, oh, this is it. We're going back to highs. We're going to talk about that here just a little bit. Last week, it was up 0.8% for the week. Yeah, 0.8% for the week there. And if you care, I always try different things to see. Utilities, best performing sector, 3.8% there. And I believe it was communications services. I'll use the ETF. Worst performing sector, 3.9 to the downside, actually. So, depends on where you're at. A lot of people like to chase momentum. Utilities, that's where that was last week. And then if you like playing discounts, I don't know that I'd call that a discount, but I just want to point that out. All right, so broad view here. I looked around and said, what do analysts think for the rest of the year? I don't know. Maybe they're smart people. Let's see what they think. Average analyst estimate for where the S&P finishes is about 3% higher than here. 5,200 is the magic number. So I'm putting my mouse right on the cursor there. Is basically where they're shooting for end of year. Some are higher, some are lower. You get the gist of it. But I just thought that'd be fun to point out and see if there's something you care about. You want to expand on it? You want me to go into their different scenarios and things? Happy to do that. All right, over a third of the S&P's reported earnings so far. We had Alphabet, it was crazy. Meta, Microsoft, etc. We're going to go over a couple of those in a little bit. You got Apple and Amazon, the big names that are going to report here this week. And if you care about the stats, about 1/3 of the names that have reported, so it's about 230 names prior to the close, right? So I'm going based on Friday's data there. They've beaten on revenue, right, or sales, if you want to say it that way. And 2/3 of those companies have also beaten on earnings, right? Average surprise, by the way, 9% higher. So it's good. If you're watching TV and they give you all the gobbledygook and say, well, this is what's happening. It's good earnings season so far. Really simple. We can do that there. Now, rates have been going up, right? Let's take a look. So not so bad today, but if we look at the long bond here, we look at prices. And so prices are moving down. It means the yield is going up. Oh, well, as a buyer, that's good. But as a consumer of debt, right, you're like, oh, that's going to be a higher interest rate there. Goldman Sachs actually went through, this is not going to be my data. I thought this was really cool, so I wanted to share it with you. Goldman Sachs went through the S&P and said, let's look at all the stocks that have what they call floating debt. Adjustable debt, right? You know what I mean? Like you have a credit card, they have a line of credit. It's the same concept. So they said, well, let's look at all of that. Then let's compare the returns of them relative to the other different areas of the market and the S&P. Now, you know that it's not going to be good, right? So if we just dive over there real quick, you know that it's not going to be great because if they have their floating rates of debt, it's going higher, right? It's going to put a little pressure on the stock. So in light blue down here, this is theirs, not mine. We have the performance versus the flat market, or what we call the equal weight market. In other words, NVIDIA couldn't jostle the bulk of this portfolio, and it wasn't in this portfolio, but it couldn't make that a mess. They do it equal weight S&P. So you look over here, you go, okay, well, since we've started the year here, next to no performance and getting weaker with rates moving higher. All right, rates moving higher, meaning their costs are going up. It's a really simple analogy or approach. Hey, what stocks are going to have increases in their debt costs? Now, here's the cool part, I think. Does that mean these stocks are bad? The names? And I know you're going to ask me, what are the names? I'm going to show you. But does it mean that they're bad stocks? No. Maybe they're discounted in the short term. If you believe that rates will go down, sooner than what most people do at the moment, then maybe you find that this is an area you want to focus on. I am not telling you which stocks to buy by any means here. I just wanted to share what they shared. So, I hope you can see it. You know what I'm going to do? We're going to go like this, and then we're going to do our Guess the Dow winner, right? All right, so I'll blow it up a little bit for you. What they did is they put it by sector, and they said, well, as we put each stock in each sector, we want to show the highest or the most sensitive names to debt. So Royal Caribbean beats out Carnival Cruise. So if you look over here, 98, it ranks in for them, 98% there. And what they're saying is their susceptibility to volatility. Ooh, I hate that I said that. Their potential weakness with rising rates is greater than the potential weakness of Carnival. And you might understand Tesla, Norwegian Cruise Lines. You can kind of get why they're in this group. So this to me was a very interesting study to go, okay, cool. Now I've got sectors to look at here, how much debt they have without having to do all the work. And then you could say, well, which one of them those are super discounted? Which one of those may be in utilities, right? We just talked about that being the best performing sector last week. Maybe there's people picking on those stocks. If we went into the utility sector and we said, show me all the stocks and the performance over the last week, you know what you'd find? I'm one step behind here, but you would find that it's those stocks that did well on the anticipation of rates not being higher for longer, as higher for as longer. Still going to be higher for longer, I should say it that way. Anyways. No, excuse me. That was a lot. Oh, and I told you we would do the Guess the Dow winner, right? Who is our winner?
Your winner last week was Nicole C. with the guess of 38,223.
Not my client, right?
She's your client. Yeah. She is your client.
Give me the next letter.
L. You know her.
I'm in trouble. Yeah.
No, you know her. You would know her. I think if you had the next name.
Okay, she's gonna.
Yeah. You know exactly what it is. She is taking the account credit. So.
Oh, good.
Yeah.
No, good decision there. I will tell you off the camera why my mind went a different way, and I thought it was someone completely different. Got really excited.
Okay.
I know that one. I just, that's an embarrassing moment for me there. I do apologize. Congratulations, Nicole, for winning. That's her first time, right?
That is her first time.
Okay.
Yep.
Hey, first time for everything. If you want to play, jazzwealth.com/guess the Dow. It's free. You can play. We don't email you or anything like that. No problems there. Now, you curious, what have been the biggest drags on the market so far? This is not a new thing, but I'm going to give you some new names. So this, obviously, is, we got our pullback in the market. But as we've had that so far this month, what's been the biggest drag? Like, what stocks have held us back from making this an even bigger rally? Well, here we go. This is a really simple thing you can put together, but we did it for you here. Meta, believe it or not, and that's earnings driven. The biggest drag on the S&P so far this month, and that's just earnings, right? They're so big. They're weighting in the S&P. Oh, I didn't put it on there for you. Their weighting in the S&P is so large that earnings drop cost the S&P 8 percentage points of the total gain, or at this point, the loss that we've had. So quite a bit of a drag there. NVIDIA also in there, and I'm pointing out these names. I want to show something really interesting. Microsoft, one of the ones as well. 8%, 7% over here on the far right. 8, 7, 6, 4% Intel. AMD, Home Depot's in there, AMD. But what am I trying to point out? These are popular names. Where is everybody? Okay, Microsoft is falling. Remember when Microsoft would fall a little and then shoot back up? Everybody wanted to be in it. Maybe not so much that name, but NVIDIA. Oh, gotta have my NVIDIA. What happened? I get Intel a little bit, right? Nobody's participating over there. AMD, all the rage for a while. No matter what happened, you had to participate. Did you know that these stocks on a retail level, almost all of them have the least amount of participation that they've had over the long term? It's a new way to look at something. We're going to just test it out here a little bit. And I'm going to start with Meta just so you can get a feel for what this looks like. What we're looking at is the percentage participation of retail, right, investors. You see Meta, it falls or whatever. Did we get a lot of people to pull the trigger on their phones and their brokerage accounts or whatever? or no. So here's a history of that, and here's where we stand now. 15% participation as a whole. 24% was the high as we go back to that, when it was, really high. So a lack of participation here. Moving on to Microsoft, we currently have a low point of participation. So currently 10% retail participation, and you can see that that is off its highs. So we have a waning interest in people wanting to participate in the high names. And this made me want to do this because I kept seeing the discussion of the YOLO stocks, right? All of that stuff coming back into play. Well, Microsoft, it's the same thing. People are not participating in this pullback as they were. So I did Intel as well, just because, they're like the dog at the moment, right? Same thing. People took a shot at the initial discount and said, oh, I don't want to participate. Retail is where we need more money to come in. And I say that because two things. We know where your money is at. It's in your high interest savings account. Oh, I can make 5%, actually 5.25% here. Our clients get that for free, no strings attached, just pointing that out. You put your money in there, I get 5.25% for taking no risk. We need the retail investor to go, hey, that's a discount. I want to be a part of AMD's pullback, which is pretty impressive at this point. I want to be a part of Meta, but not at these prices, right? That's what they're still thinking. So anyways, pretty cool there. Oh, that also translates into, last thing, I'm going to hit you with this, last thing. So what it translates into is a higher short positioning by some retail investors, I get you, but also by bigger participants as well. So if you take a look at that, here is, we're doing it by market cap, just minus that for a second. What is the percentage of short interest if the values were all equal? I don't know how else to say that, but we're essentially not giving more credit to a bigger name because it's a bigger name, or less credit because they're not as short, right? 1.8% is where we stand right now. If you don't care about all this, just look at the graph. Okay, March 27. Okay, that seems like we're going higher and higher and higher and higher. So we have a lack of participants in the big names that we need, or most of them there. And we have more people deciding to use this rally to get short. So that's one of the fun reasons I keep pointing out, like, I don't know if this here is going to be a rally that takes us back to highs. I don't think that's the case, right? I just can't say for sure. There's a lot of weird things going on like that. All right, anyways, just wanted to go over that, have some fun, you know what I mean? Teach you something new. Hopefully you learned something. If you did, jazzwealth.com, check us out there. Hopefully you'll, want to work with us and things like that. If not, just happy that you're watching, hopefully learning and playing Guess the Dow. You know what I mean? That's a fun game there. All right. Number 66, we're out. 66 best. Feels right. Feels right. Yeah. I thought there'd be some applause. There's none of this. They think I'm in the room by myself just making a video. A little bit.